And on this one, I mean, you'll see also the RSI is oversold, but hello, it's been oversold since November. Hey, what's up YouTube? This is Foxtel Digital coming to you again with Black Girl Stocks. And this is another segment of our top 3 option plays this week where we're just going to go over a few different trades, stock fundamentals, and different strategies that you can do to make it through, okay? So if this is your first time watching this video, please make sure that you click that thumbs up button. It really helps the channel. Also subscribe and click that notification bell so that you'll get notified anytime I upload a new video for you guys. If you're interested in joining our option trading group on Discord, just scroll down and you'll see the invite. Let's go ahead and get into this week's plays. So the first stock is CCL. This is Carnival Cruise. And right now it's trading at $19.99, which actually kind of sounds something like something you pick up from the store. Looking at this, I already know what you guys can see from this. I already know the first thing that you're going to see when you look at the stock is this beautifully shaped uptrending pattern that started back in early December, right before their earnings report that really didn't turn out that great. You're seeing overbought, oversold, overbought, oversold, and you'll see that same pattern down here with the RSI indicator. And right now where we are, it looks like we're at the low point in the pattern. And like I said, even just by looking down at the RSI indicator, the RSI right now it's at 28. So that definitely would be considered oversold. But the $1 million question with this right now, is this an opportunity to buy? And what direction do you actually see the stock going in? So apart from this pattern, news-wise, last week, the conditional sailing order, or the CSO that was set in place for cruise companies during the pandemic by the CDC expired. Okay, so that's done with. And now following the CDC's guidelines are going to be optional for ships operating in foreign and US waters. The CDC actually said customers should avoid cruise travel right now, whether you're vaccinated or not. Of course, they're still going to recommend that cruise lines follow its original COVID-19 precautions, but you can't stop people from doing what they want to do. If they want to cruise, they'll cruise. So with more incoming business, with these restrictions kind of being lifted, this could help push the stock further into the uptrending pattern that we are looking at right now. One of the biggest concerns for investors right now is the expected increase of interest rates on debt. Together, the top 3 cruise lines like Carnival, Royal Caribbean, the Norwegian cruise lines, they all have over $67 billion worth of collected debt. Now, a lot of cruise companies were forced into more debt over the past 2 years during the pandemic just to stay afloat. No pun intended, but they had to go into a lot of debt just to keep their heads above water. Carnival alone doubled their debt for pandemic. So their total debt, it doubled just in the past 2 years. So the sooner the higher interest rates start to happen, the more money that these companies are going to end up paying on those debt. That could have a negative effect on the long-term growth of the company. Okay, as soon as the RSI becomes oversold, that's not directly a buying opportunity, because if you'll see here, the RSI is frequently oversold for a long time. Right here, it was pretty much oversold for a full month and also experienced a full downtrend. So for me, going into next week, like I said, I'm going to be bearish. And for CCL, before I would get into a position, I would have my entry target set for 1975. Now that's not too far from where we are on the close of from Friday, so 19.99. It has a little bit, a couple of cents to drop, but if it starts moving in that direction with higher trading volume, then that is going to be a good indication that we're going to continue in that downtrend. And I would have a target of $17, and I would have my target set around 17 if it was going to drop to that point. And so we'll see what happens with that. Going to the options now, very, very reasonably priced. 1.65 for premium. 3, that's not terrible. 75, 0.75, 0.28. These aren't terrible. We have a very tight bid and ask spread on this one, 5 cents. Also, see is the huge number of open interest and volume. I'm going to be bearish, so I'm going to go into the puts. And for this one, I'm going to go a little bit further out, and I'm going to go with the March 18th expiration date. So it's almost 2 months. It gives you some good time to see some movements. Plus, the prices are pretty decent. I love this. I'm going to go ahead with the $20. I'm going to go ahead with the $20 strike price, the $20 put option, because says, this is the one with 31,000 open interest and almost 2,000 volume on Friday. So that's really, really good. And you'll see with this one, like I said, it has a pretty good bid-ask spread. The most that you can lose with this one is going to be around $176, depending on if you're doing a limit, the most that you would lose with this is $176 right now. So this is something that I would look for with CCL if it continued with that strong downtrending pattern. So we'll see what happens pretty much with the market next week. Okay, and the next stock is PLTR. This is Palantir Tech, closed at around $13.50 on Friday. So a lot of things happened last year in 2021. There are a lot more new investors trading. There are a lot more new investors trading due to easy access to knowledge. Obviously, COVID-19, it was definitely the year of meme stocks like AMC, GameStop, crypto, and things like that being fueled by message boards like Wall Street Bets. Palantir Tech is actually one of the top 10 popular stocks that are talked about on Wall Street Bets. If you look at the stock on this 180-day 4-hour chart, it's been underperforming for most of 2021. Now, I'm gonna go to the year chart. Let's zoom back a little bit more, and you'll see here that they actually did reach a high of $45 back in February of last year. Mind you, this was a new IPO. This stock, it just became public November 2020, and it randomly, it just skyrocketed from $10 up to $45 in a couple of months. You know, it's been falling ever since. And even with the stock being so popular now, they've had growing revenues and margins, positive cash flow from operations. To a lot of investors, Palantir could be a very, very lucrative investment in the long term. Short term though, I would probably want to go with the overall trend. So you'll see on Friday alone, it dropped 7% after a Wall Street analyst lowered his price target from $25 all the way to $18. And it's not because it's a bad business. A lot of tech stocks are going to be going through it and kind of see some harsh effects from talks of higher interest rates. Now, a lot of tech companies grow their business off of debt. You know, there's business debt that can be good, but with higher interest rates, that just means it's going to be more money. There could definitely be more downside for this stock going forward. So for PLTR, I'm actually going to be bearish on this position also, just based off of the trend. And if I was going to have an entry target for next week, I would have my entry around 1330. And the reason why is because if it continues dropping with decent volume, obviously, then that would be a good indication that it would continue in that direction. And on this one, I mean, you'll see also the RSI is oversold, but hello, it's been oversold since November. Since that, they've just been struggling since this last earning loss. So we'll see what happens with that one. Now, this one you'll also notice beautiful, beautiful, beautiful premium. Okay, 145, 200, 284. Extremely in the money would be $400. It's not bad. And what is the delta? Delta on that is 87. It's pretty much gonna move like the stock. Now for this one, I'm also gonna be a little bit further out, and I'm gonna have pretty much the same expiration date, March 18th. It really gives us time for these stocks, kind of see what's gonna happen next week going into Monday. Are we still going to be overall bearish in the market, or are we going to see some turnaround? And we said that we're going to look at the March 18th. It's a little bit further out. And for this one, I'm going to go ahead and keep it cute. I just go for cheaper options that have the highest open interest or volume, just things that are very active, things that people are going to get in and out of. It's going to be more lucrative. It's going to have smaller bid-ask spreads, and you'll just get a better price for getting into that position. So for this one, I'm going to go for the $14 March 18th put. And you'll see on this one, we have it's not as much as Carnival Cruise was, but we have 8,000 open interest and, almost 1,500 volume on Friday. So that's pretty good. The delta is okay, 0.449 delta. That's cute. And the theta is pretty low too. I like this. Let's see. Just kind of going back to the stock chart really quickly. If you'll see down here on Thinkorswim, I have this volume indicator. It just tells you all the volume that we've had today, the average volume, the average volume of candlesticks over 30 bars, and all of those things. And if you want to see how to get this, I actually posted this in the previous tutorial style video that we had on break breakout trades. So make sure you check that out so you can see how to download. It's very easy. It's literally just a click of a download and it pops up in your Thinkorswim. So make sure you check that out because it's very, very helpful when you're doing breakout trades or just any type of trades when you want to monitor how the volume is today versus that daily average volume before. So this one looks pretty good. It has an even smaller bid and ask spread, 4 cents. This is really, really nice. I like that. Woo! Hey! I like that. And lastly is VET. Not BET, VET, like the vet. Now this is Vermilion Energy. That sounds like Vermilions. And you'll see that right now it's trading at $14.29. Now, if you remember, towards the end of last year, there was a lot of growth in oil and energy stock with the passing of the infrastructure bill. And, you know, we're trying to use more clean energy. We're trying to help the environment here. So obviously you can see why this stock has been doing so well this year. Okay, wow, they had a really, really good earnings report in November too. So ever since that, we've been hearing more good news. And then also earlier this month, analysts upgraded their Vermilion price target up to $18. But all that aside, I'm not even talking about that. Let's get back to this. I really, really love this strong uptrending pattern that we have here. Somewhat similar to, what was the first stock? CCL. But this one, I'm a little bit more convinced with because it's an energy stock. We're going into the winter. So, you know, obviously we're going to need more energy. We're going to use more energy. And then also, we just hit this high of 1627. So this was just a couple of days ago. It was back on Tuesday. It's dropped a little bit. Could be a correction. Just even looking down at the histogram of the MACD indicator, it looks like it has a possibility of slowing down a little bit and coming back up. Same thing with this. Our RSI is pretty low. It's at 30. You know, it could have a possibility of having a rebound going into next week and continuing in that uptrending pattern. Just zooming in a little bit closer. Yeah, so for this one, if I was going to anticipate it moving back up into that uptrend going into next week, I'm gonna have my entry, I'm gonna have it around $15 because that is obviously, that's peaking past where we were trading all Friday. Now, going into the options, you're gonna love this. This one isn't as popular as the other ones. They don't have as much volume or open interest. But for this one, I'm gonna pick the same expiration date. It's gonna be on March 18th. And for this one, I'm just gonna keep it simple. I'm still in between the $15 strike and the 12.5 strike, but honestly, if you wanted to stick with the 1.2, you can just get 2 of those and, you know, still maximize with the decent delta as long as the stock is going in your favor. So that's an option that you can do with that. Now, make sure to check out our Discord group and also make sure that you check out this video that we just posted on the breakout stocks, the breakout patterns, the breakout trends. And then we also have a Thinkorswim breakout scanner setup. Actually, I think we did 3 different setups on this video. So make sure you check out that video and I'll catch you guys on the next one.